everyone, and welcome to this week's market update from ICM.com. So first we're going to talk about the key movers of last week, and then we're going to highlight the top economic events and releases for this week, and then go over some major charts on the MetaTrader 4 platform. So first, starting with the key movers for the past recent price action. Still COVID-19 implications, especially with the numbers rising again in Europe, where we had a couple of days ago a huge surge in France, and also the surge that occurred last week in the United Kingdom. So these are drawing a lot of questions whether the authorities will respond by maybe restricting movement again, or even going for another lockdown. So this would be in check, and the question from investors. The total cases surpassed at 29 million. Deaths crossed also 900,000, while recovered cases are around 19.65 million. So this is for COVID-19. Moving to the next mover was the Bank of Canada monetary policy meeting. The bank kept policy unchanged, no changes to policy settings. Also highlighted that the economy is still evolving in line with expectations, and interest rates will remain at their lowest bound until reaching a full recovery. On the next day, there was also a press conference for the governor, where also he stated, or he highlighted the rise and the value of the Canadian dollar and its impact on inflation. So also he affirmed that the strength of the Canadian dollar will be in check and will be monitored closely from the central bank in order to see the impact on price stability. Moving also to one of the key events that took place last week, the European Central Bank monetary policy meeting. Also, the ECB left policy settings unchanged, didn't change anything from rates to asset purchases. However, they set a target for the PEPP, which is the Pandemic Emergency Purchase Program, at 1.35 trillion euros, and also the asset purchases will end, or the program will end near the transactions of the program will end in June 2021, and the bank will remain ready to adjust any of its instruments in order to reach the mandate or to sustain its mandate. So this is from the ECB. Also, the GDP forecast were lowered in 2021 and 2022. However, they currently expect a contraction of 8% this year instead of 8.7% in the prior meeting. Also, inflation expectations were ticked slightly higher in 2021. So this is from the ECB. One of the key answers that everyone was waiting for is how the ECB is monitoring the recent surge or the recent rise in the euro against other counterparts, especially against the US dollar, especially after the top ECB economists, or the chief economist, Philip Lane, stated that the rise is impacting price stability and inflation, and it should be monitored closely, despite the fact that the bank is not targeting any FX rate. However, this was one of the key aspects that investors were waiting for. The ECB President Christine Lagarde said that there is no need to act currently. However, and also reaffirmed that the bank is not targeting any FX rate. However, they will be monitoring closely the strength of the euro and whether it will affect the economic recovery. So this is from the European Central Bank. We didn't see much of an impact on the euro dollar. However, we saw the euro rising to almost 119.17 and then losing some gains, and after that trading sideways. We're going to talk about this in the last part. Moving to also one of the emerging, or one of the key movers that emerged recently, again, the Brexit clash between definitely the United Kingdom and the European Union, especially after the internal bill issue. So the European Union is not happy with what's going on, especially with this internal bill, while Boris Johnson is defending this bill, and especially that it would give some consideration back to Northern Ireland, and he believes that the treaty reached, or the previous deal, wasn't fair, or it's not one of the good deals for the United Kingdom. That's why he's going forward with the internal bill. So we're going to see how this will affect or will impact the course of Brexit. So this is weighing well on the British pound. However, we saw a bit of recovery today. With the British pound, the House of Commons will be voting on the internal bill. So also this is one of the key movers that we were watching out for, and we have to watch out for in the coming week. Solid US economic data in the United States continue to surprise to the upside, especially the consumer price index or inflation figures, which came at 0.4% month on month. It's better than rivals. Also, leisure jobless claims came around 884,000, almost similar to the previous reading. However, in general, this is showing that the US economic recovery is underway. Also, the US fiscal stimulus, there is a bit of delay. There is a clear separation or clear divergence in views between Democrats and Republicans, and there are no expectations of any deal for reaching any fiscal stimulus or relief bill anytime soon. So this is also a matter to watch out for, especially for those who are trading stocks or awaiting any relief bill in the United States. So this is one of the key movers also, especially as the clock is ticking and we are approaching the US elections. So these are the key movers of the past week. Now we're going to highlight the top economic releases for this week. We have a busy economic calendar. We start with Tuesday from Australia, or early in the Asian session. The minutes of the last monetary policy meeting by the Reserve Bank of Australia. There are no expectations unless the report should highlight, or the minutes should highlight, that the policy will remain highly accommodative and will have to ensure a rapid and safe recovery. Moving to also economic data from China for August, industrial production expectation of a rise of 5.1%, almost similar, or a good reading relative to previous readings of 4.8%. Moving to the United Kingdom, the jobs report or jobs figures, we started with claimant count change for August, expectations of a rise of 100,000, while the average earnings index and the unemployment rate are expected to our average earnings index is expected to drop by 1.3%, and the unemployment rate is expected to tick higher to 4.1% in July. So this is from the United Kingdom. Moving to the Eurozone, German ZEW economic sentiment is also expected to drop to 69.8 versus 71.5, a reading in September. This is also a result of the recent trajectory of the economic indicators that we saw in August from the Eurozone. So this is definitely impacting or affecting sentiment. Moving to the United States, industrial production for August, expectation of a rise of 1%, moderate relative to the previous reading of 3%. And then we end the day with the American Petroleum Institute report about the crude oil stock. Moving to Wednesday, we start early from the United Kingdom with the inflation figures. So CPI should be monitored closely because it would impact definitely the tone of the central bank on Thursday. So inflation reading, core CPI, consumer price index year-on-year expectations of a reading of 0.1%, while PPI input also expectations of a rise by 0.3% in August. Moving to the United States, retail sales reading of 1% is expected. From Canada also, the inflation figures or the consumer price index expectations of 0.1 reading, also a shy reading, slight increase. The weekly crude oil report by US Energy Information Administration. And one of the key events of the week, the Federal Open Market Committee meeting or the Fed interest rate decision. No changes to policy is expected. However, investors are waiting a lot of clarification, especially after Jerome Powell's announcement in Jackson Hole that the Fed is looking for employment ahead of inflation. So it is looking to sustain or to reach good levels on employment. Despite inflation hovering slightly above target. So this needs a more clarifications, maybe in the presser of Jerome Powell, but also the statement will show how the Fed will adapt to such policy. And then from New Zealand, we have a final reading of the second quarter GDP, expectations of a contraction of 12.8%. Thursday, we start early from Australia, the jobs report. Expectations that employment change dropped by 50,000 in August and unemployment rate rose to 7.7% from 7.5%. And then Bank of Japan interest rate decision, no changes expected from the Bank of Japan. Moving to the Eurozone, inflation figures, consumer price index. This is the final reading. We witnessed the preliminary reading last week. It was a drop. So it showed a drop in August. So this should be monitored closely. If the reading was worse than expected, it could weigh on the euro again, and maybe it could trigger some further verbal intervention again from ECB officials. Also from the United Kingdom, we have the Bank of England interest rate decision on monetary policy meeting. No changes are expected in policy. Interest rates to remain at 0.1%, and asset purchases as previous. And then we have the weekly jobs claims from the United States. Expectations authorized by only 850,000 versus 884 the prior week. On Friday, it's a bit shy relative to previous days. We have retail sales figures from United Kingdom and Canada showing a slight increase, one for August and another for July. And then Michigan consumer sentiment, the preliminary reading for September, sentiment ticking higher to 75 from 74.1. And we end the week with the US Baker Hughes oil rig count, which are still hovering near 180, 181 level during the past couple of weeks. So these are all the top economic releases and events. You better also watch out closely to any developments regarding Brexit. There's also another key mover to watch out for. There were some certain restrictions from China on some US diplomats and from US and some Chinese diplomats, and China replied or responded with the same kind of actions. So also this could mean something in the future if these tensions were continue to escalate. So this is from these are among the key movers to watch out for. Moving to the MetaTrader 4 platform to talk about to check how the price performance was during the past couple of weeks, the past week. So we're gonna start with the euro dollar. The euro. Let's start with the weekly chart. I'm just gonna remove this and then lower market watch in order to have better visual on it. So last week we witnessed a doji candle close on the euro dollar. If you go for the daily chart, we can see here that this move took place on Thursday due to while the press conference was going for Christine Lagarde, since the market was expecting further movements or further dovishness from Christine Lagarde on the euro. However, this didn't happen. The market moved to the upside, trading almost near 1917, near the first stop that was reached in the euro back in July. However, gains were erupting to the end, and then the market continued. This was on Friday, and these are the two hours open on Sunday, early Monday, and then this is today. The performance is up. This is still on the rise. So what we can notice is that the euro dollar is still trading on the bigger picture. We're still trading inside this consolidation area, awaiting some fresh clarity, some more fundamental drivers in order to have either a break to the upside or to the downside. If we just can look at the ranges, we're almost in the middle of the range between 117 and almost 117, almost 120. We're trading near 118.80. So slightly upper, slightly closer to the upper boundary of this rectangle. So this is for the euro dollar on the bigger picture. If we just add some of the technical indicators, you can see that there is okay. So on the if we just have a look on the RSI, we can see that there is a falling trend line on the RSI. We're just approaching it now, while this fall in the RSI or this drop in the RSI was accompanied with a consolidation on the price. So we're stuck inside this consolidation inside 300 pip range. However, if you can see also how the Bollinger Bands, they were close to each other, and how the market rebounded when touched the lower bound of the Bollinger Band on the daily chart. We're using period 20 and deviation 2. We're seeing that volatility is lessening due to this consolidation zone, and we're awaiting further clarification for a break either to the upside or to the downside. So this will depend on the tone of the Federal Reserve on Wednesday, and also on any clarifications or any announcement from ECB officials going forward relative to the FX rate. So this is for the euro. it's very clear. Even if we go for lower time frames, you can see here that on the 200 H4 exponential moving average, we found a little bit of a support, and now we're trading back above the 100, 200, and the 20 simple H4 moving average, which is the middle band of the Bollinger Band. On the hourly chart, also you can see how at the 20, the middle band crossed above the 100 and 200, and currently the 100 is crossing above the 200-hour exponential moving average. If we just remove all these and try to highlight some of the key levels to watch out for. So first of all, we better point out for this almost we have this channel move combining the tops and the bottoms reached since late August, early September. So we need definitely a break above 119 to have a little bit more of the positivity. So the first resistance level could come in at the previous high of 1917, and after that we go for the 120 psychological level and then 120.80. And on the downside, the first support could come in near almost 118 level, and after the lower bound of the range near almost. So if we just zoom out on the picture, you can see here the 117.50, it was a key support, and then we have one closer to it near 117 level. So this could be a key support area for the euro for any dips between 117 and 117.50. And the first support zone could come in at 118 almost level. So these are the key levels for the euro dollar. If you are trading the euro dollar, watch out for these levels. Now let's move to the British pound against the US dollar. A sharp drop. It's very clear that we had. Okay, so first let's point for a key line that we were trading almost near it. So let's take into consideration that this line could be the middle of a certain price movement of the or linear deviation for the recent price movement. So as long as we go far from this line to the downside, it's more bearish scenario, and as long as we approach it, we're getting to a more positive or a more bullish scenario. So what we have to first break above in order to have some positivity again, it's the 130 level, 130 psychological level, which is almost relatively close to the trend line. And after that, we can tackle further resistance zone near 131.80, and after the high near 34.85. And on the downside, definitely the recent low of 27.40 almost, and then the 24.60. These are the key levels on the daily chart if you are willing to trade the British pound against the United States dollar. I'm going to add some indicators and then go to other time frames. You can see here that the 100 and 200-day exponential moving average is holding. The price exactly touched the 200-day exponential moving average and then rebounded. And also this was accompanied by RSI dropping almost to 30. We go to the H4 chart, you can see how the price was trading near in the lower part of the Bollinger Band, rebounding to the 20 simple H4 moving average and then touching the lower band again. And now we were able to trade slightly above it. If we just add also on this, you can see that we were trading inside the channel, and then this channel was the price was able to trade above this channel for a while during the past couple of hours. So this is on the H4 chart. Now, since we are expecting some further clarifications of what's happening, maybe we could be having some sideways move ahead in order to have some more clarifications. Maybe we can retest back the 200 H4 exponential moving average. Watch out for the divergence which took place here. The divergence usually suggests that the market could go back to the previous zone, which was here almost 130 level, 130 psychological level that we just highlighted, 129.80, 130. So this is a key area. If the British pound was able to trade back above it, this could maybe give the bulls some hope of another move higher. So this is for the H4 chart. If we go for the hourly chart, we're just approaching the 100-hour exponential moving average. We found resistance near it, and then the price rebounded slightly to the downside. Watch out for any break above it, unless so we could be having either two-way formation. If the market gets more bearish and we have a little bit of more retaliation with what's happening with Brexit issue, we could be facing some move to the downside again, and after if not, we can go for, if there was a bit positive scenario, we can have a little bit of a sideways move where the price could approach the 200-hour exponential moving average, and then trade a little bit of sideways, and then to break a little bit above it if we have some more clarifications on what's happening for Brexit. So these are the possible scenarios for the British pound against the US dollar. On the hourly chart, we can see here a little bit also of positive move where we're going to an extreme move to the upside on the hourly chart. The RSI is trading above 70 for the first time in almost 2 weeks. Also, if we go for the 30 minutes chart, we can see that the price is trading near the 200-hour exponential, the 230 minutes exponential moving average for the first time since early September, where it acted as a key resistance for 2 times. So this is for the British pound against the US dollar. I highlighted the levels. I'm going to highlight them again. So we go for almost 130 psychological level, 130, and after that we go for 131.80. I'm just going to remove all these. So these are the key levels to the upside in order to have some positivity. So we have this clear area here near 130, and on the downside 127.50 and 127.50 level. And after, we can go for a little bit of more extension near 24.70, 25.20 on a worse scenario, or on a much bearish scenario for the British pound against the dollar. Watch out for also this trend line. If we go further to the downside, watch out for how the price can react with this trend line. So this is for the British pound against the United States dollar. Moving to the dollar against the Japanese yen, we had a little bit of a move during the past 2 hours. However, we're still inside a bigger or a key consolidation zone between 107 on the bigger picture, between 107 and 105, awaiting some further clarity maybe on the appointment of the new prime minister. However, the expectations are that the coming prime minister will continue with the Abenomics as they were, so nothing much could change for the policy. However, we have to have a clear break either below 105 in order to target further downside or previous low near almost 104.20 level ahead of going back to lows reached in March, or a reversal where we need to definitely move above 1625 to have a little bit of a positive momentum again in order to retest 107 level and again to trade back above 108. So these are the key levels if you're trading the dollar against the Japanese yen. Just to add these indicators, we can see that the hourly on the H4. Let's start with the weekly chart. We can see here the consolidation during the lower band of the lower part of the Bollinger Band. On the daily chart, we're ticking lower, and we're having the lowest close. We could be having the lowest close in almost 2 weeks. A very bearish engulfing candle for the previous price action, for the 2 weeks price action. Also, we had a break of this trend line combining the previous lows. So watch out how this will evolve. Also, the RSI still has room to move. We're still above 40. Moving to the H4, we can see how the price moved lower than the band, and there is an interim support near the previous zone, near 105, the one that we talked about for the key range. So watch out for it. And the RSI dipped below 30 on the H4. On the hourly chart, we can see also a much extended move. Also, the bands are wide, are so diverse from each other. So this could signal for some traders, could signal some reversal. However, you shouldn't be mistaken for what's happening on the Bollinger Band, since the market was moving inside the short range for a while. So definitely, this we're gonna give such move. This is gonna look very bad on the Bollinger Band. That's why you better go for bigger time frames in order to have a clearer picture on what could be happening. So this is for the dollar yen. Moving to the Australian dollar against the United States dollar, which ticked a little bit higher to the upside earlier today. Last week we had almost a dodgy candle, nothing much to talk about. On the daily chart, we can see that the price found some support for a while near the 20-day simple moving average, which is the middle band of the Bollinger Band. we're still trading above the 100 and 200 hour 100-day exponential moving average, near the upper part also of the price the price fluctuations that we were trading recently. So still it remains elevated. The RBA could be mentioning this, and the minutes of the latest monetary policy meeting could be mentioned. The strength of the Australian dollar could be mentioned in this. So this is for the Australian dollar on the daily chart. If we go for the H4 chart, we can see that we're trading near the upper band currently. However, the bands are too close to each other, signaling that we were stuck inside the key consolidation zone for a while. So this is the consolidation area that we've been trading in, almost between 72.40 and 73.20, almost an 80 pip range. So watch out how this will evolve, especially that the RSI is still in the neutral zone between 40 and 60. It's around 55. So watch out how the price will evolve from this tight consolidation zone. If we go for the hourly chart, you can see it much clearly that we were trading inside this zone for a while. We had an abnormal move to the downside, and then the market moved again inside this range. So watch out how this will evolve, since any break above the upper band of this range could trigger another retest to the previous highs near almost 74.10. So we're currently trading near 73. So the coming upside resistance could come near 74.10. On the downside, definitely we have to watch out for. We have a couple of trend lines that we better watch out for. However, one of them was holding the previous low, reached near 72 level. So on the downside, we have an interim support near almost 72.50. The one we talked about, 72.50, 72.40, and after that we can go for 71.85. These are this is an interim support. This is another support, and the lower one could come. So you can see how two trend lines combining the previous lows and the recent lows, they met at a certain point, which was a key reversal point. So watch out how the price will respond to any retest for these trend lines if we turn back lower. However, the positive risk sentiment in the market that took place following the announcement during the first couple of hours of the week, especially following the announcement that AstraZeneca is resuming the late stage trials. So this had a little bit of an impact on the positive sentiment in the market, and this is driving risk on trades higher. So this is for the Australian dollar against the United States dollar. Moving to the New Zealand dollar, also almost similar move to what we're witnessing on the Australian dollar. I'm just going to delete all this. So we're having a little bit of a positive momentum, recovering what we lost last week. The losses of last week were recovered during the first couple of trading hours of this week. If we just add a template showing the indicators, we're trading above the 100, 200, and the 20, 100 and 200 exponential weekly moving average, and the 100, the 20-week simple moving average. If we go for the daily chart, we're also trading or edging higher in the upper band of the Bollinger Band, and we're still trading inside this channel. So we're almost in the middle of the channel. The RSI is also between 40 and 60, so almost is still neutral. So watch out how the price will react. If we were able to trade above 67, which was the previous resistance in this area, we could be poised to retest the highs, or at least the top of the channel again. So I'm going to highlight this level. It's around 67, 76, almost 70 pips away as a key resistance to the upside. If you go to the H4 chart, you can see that the price is moving higher than above the Bollinger Band, and the Bollinger Bands are widening a little bit. The 20 simple moving average is crossing also above the 100 again. On the hourly chart, also the moving averages are all close to each other due to this consolidation that took place during last week, and now we are emerging out of this consolidation zone. So watch how the price will evolve. How will this price action evolve? Just remove all these indicators and just highlight the key levels. So the bigger picture, we're still trading inside this consolidation or this upward channel. So definitely we have to set the previous stop near 67.90, and then another level almost near 69, which was also a key area back then in October 2018, 69.40. And on the downside, or the first support near the previous stop near 66. You can see here it was a top, and then here it was another time resistance, and then here the market fluctuated near this level, and then here it is a support again, and another support zone near 64.90. So these are the clear levels for support and resistance for the New Zealand dollar against the United States dollar. The first resistance near 67.90, 68. The second resistance near 69.40, and on the downside support near 66 and 64.90 levels. This was for the New Zealand dollar. Moving to the Canadian dollar, which moved away from the trend line for a while and then corrected or traced back lower to the trend line. So we are waiting a little bit of clarity for the move. The Canadian dollar is being under pressure slightly due to the drop also in oil prices, which triggered this move to the upside. However, the market moved sideways following the Bank of Canada meeting. If we just go closer, we have a closer look. I'm just going to add. Okay, if we just go for the daily chart, you can see how the bands are steady. The slope of the bands are steady here due to this consolidation that took place during the past couple of weeks, the past couple of days, following a sharp move to the downside. If we go for the H4, also you can see how the bands are closing again since the past couple of hours. Also, we had this smaller consolidation inside the bigger consolidation. So watch out how the price will move. If you're looking for a couple of pips to trade, watch out for the break above 32.10 or below 31.10. So this is a tight range of 100 pips. Watch out how the price will break. If we were able to break to the upside, we're definitely gonna we have a better chance to retest the 34 level. And if we were able to break below 31.15 again, we could retest the lows near 130 levels. So these are the key levels for the US dollar against the Canadian dollar. On the hourly chart, also the moving averages are close to each other due to this consolidation that took place recently. So watch out how this will evolve. I'm just going to remove this and then highlight the levels more clearly. So this is the bigger consolidation area that we're trading in. You can go for a smaller one here near 31.50 ahead of 31.10, and on the upside 32.60, and after we can go for 34 level, and on the downside definitely 129, and you can add also this trend line since we were witnessing higher highs and higher lows. However, here we failed to have another higher high. However, we have to check how the market will react in the next couple of hours. If we were able to go back and retest the previous high and then go for a higher high, so this could have a bigger probability for a reversal or a bigger correction for the whole move from almost 147 to the lows of 130, 129. So this is for the US dollar against the Canadian dollar. Moving to gold, we're still inside this big consolidation zone on the bigger picture. So if we just go for this, it's very there are a lot of talks for a couple of triangle formations, and also we have a series of support zones near 1900 or support pullbacks near 1900. And also lower lows for a while. So how this will react, the Fed's policy or the Fed's meeting on Wednesday could be one of the movers for those who are trading gold. So we're still trading on the bigger picture on the weekly chart. We're still trading inside inside the bigger weekly candle. The volatility definitely it's lessening. So this could mean that we could be going for a breakout soon. However, we need further clarifications on the outlook, which could support gold for a while. We just got this. You can see here on the weekly chart how after trading above the band, the price is moving sideways and approaching the middle part between the 20 and the upper band. On the daily chart, the bands are closing in, the Bollinger Bands are closer to each other currently, awaiting for some further clarifications, maybe for another break. You can just highlight the recent highs and the recent lows in order to have a closer look or a better look on what you should be waiting for in terms of the next movement for gold. So this is the formation for gold, and definitely you can also have a look on what's happening on the RSI. You can see how the RSI is consolidating here near this level, which is also making a smaller formation or a smaller triangle formation. So watch out how gold will go next in order to enter a trade which could follow the move. In order to highlight some levels, we have 1990 and then the previous top near 2018 or 2015. Ahead of retesting 2076, and on the downside, definitely 1900 is one of the key levels, and then 1860. So these are the key levels. If you are trading gold, watch out for how the price will react to this downtrend line, which is coming near almost 1970 level. So these are the key levels if you are trading gold. Moving to WTI, which had finally moved during the past couple of days. If we go for the weekly chart, you can see 2 weeks of consecutive losses, falling below the recent this whole move that took place for almost 2-3 months. The market is moving again, bringing some volatility again, but definitely this doesn't mean that this could be the key move. So maybe we could be having an initial move and then the market's gonna move to the other side. So this needs to have a bit more clarification, especially with a dovish outlook on demand, on oil demand for the coming time. So this is weighing on oil prices. Currently, we're trading inside a smaller consolidation zone. If we go for the H4 chart or the hourly chart, we can see how the market here is consolidating inside a certain range. So you can see here almost you have a certain consolidation formation that is taking place, and we are close to breaking away from or breaking out from this formation. We're just going to highlight some key levels on the upside. You better watch out for any break back above 39 level, 39.70 and 40 levels. So this is a key area. If we were able to trade back above it, this could give the bulls some room to push the market a little bit higher. I'm just going to remove the technical indicators to highlight on the price action itself. So this is a key area here. And then after we could retest 42 level, and on the downside, definitely the recent low near 36.45. And after that, bears could have some room for a move lower towards 34.46. So these are the key levels if you are trading oil. Watch out for these levels. However, also fundamentally the market is being affected by headlines. So watch out how if we have some headlines concerning the oil demand outlook. So this is also a very important catalyst for the market. Moving to the Dow Jones, which is pushing slightly higher during the past couple of hours, opened on a gap, started the week on a gap, and then it's pushing a little bit higher. We have a little bit of good formation here. So the market was trading below this trend line. So this trend line combining all these was respected a couple of times, and then the market rebounded from it, and then we're currently trading back above it. There is a probability of having an inverted head and shoulder formation, which could be supporting a push higher again. So this could be the inverted head and shoulder, shoulder, head, and shoulder. which could lead for another move higher. So this could be one of the scenarios that could take place. On the bigger picture, we're still trading. On the bigger picture, we're still trading inside this channel here. So these are the formations that you better watch out for. The bigger channel, and then this trend line combining the recent highs. The market was going for lower highs, and definitely in the past couple of hours we were able to post a higher low, which could be a sign for reversal. What we just need is another break above this high, which is around 28,200, in order to confirm maybe another push to the upside. So mind 28,200, 28,570 ahead of key 29,170, and on the downside, definitely 27,174, and ahead of another move lower towards 26,330. So these are the key levels if you are trading Dow Jones. Also mind any break below this trend line or the bottom line of the channel if it happens, since the market held 1, 2, 3, 4, 5, 6 times it was retested. So watch out how the price will behave if we approach this again. I know it's a bit far, but definitely if we were able to go back lower, this could be interesting. And definitely here the market retested this trend line 1, 2, and 3, and then was able to break above it a couple of minutes ago. So this is for the Dow Jones. This is all for today. If you have any questions, please write them down. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Perfect. I believe this is it for today. If you have any questions, please, you can send an email to webinar@icm.com or support@icm.com, and we'd be glad to help you. This is all for now, and thank you for watching.